Welcome back. We're going to be doing in this video. We're going to be doing a strong analysis and in the process to be backtesting, right? Yeah. So I'm going to start from this day when we had a shallow distribution and previously in London accumulating, right? So that tells us we should get a distribution here. Instead, we got a shallow distribution, which meant that we should get a distribution in Asia, and that was the case. We got a distribution in Asia. So and the actual time of entering to the market was 2 a.m. because it was a single session accumulation. I assume so, right? Because it was a shallow distribution, which meant it to be a distribution. All right. So I should move to 2 a.m. now. But at 2 a.m. this high time frame, there wasn't any available formed retro block or anything, any sort of order block. So I had to jump into 15 minutes time frame. Then on the 15 minutes time frame at 2 a.m. right there, identify a retro block and then jump in and push price to the intended direction, right? So at 2 a.m. I think the visible one could have been this one. That this could have been the only retro block available. And that's where my eye could have fallen into in the first place after just opening the chart, right? So and price closed above it, retraced into it, then formed the first retracement, first bullish candle, which is the first retracement candle, which is candle A. Then I should have bought after price showing interest in moving higher at this place here. That could have been my buy position. Then I could have been stopped. Could have stopped the position right here after just this close below the low of this candle A, because if price intends to move higher, it is not even supposed to come to 50% of this candle. It was supposed to move higher continuously, but instead it retraced back closed at the low of this candle, forming a retro block, which is a bearish retro block. Now that's a bearish retro block. So then price should have closed right here, jumped in from this point, from that point, then price retraced back into my retro block. So when price was coming back into this bearish retro block, my eye could have been above this low, this high. So I never wanted price to close above this high. If it closed above this high, that meant that we're not changing the trend to a bullish trend. Yeah, and that could have been devastating market. That could have been signaling a ranging market, but instead it just rolled down to the sell side. That could have been the first setup, right? A sell from this point, that point, to this point right here. That could have been the first setup, right? That could have been the first setup in Asia. Then we move to the higher time frame because we expect to be done. No, not really. After call the sell side, take the profits, and then I should wait to see some more confirmation if price wants to move lower or higher, but instead it showed confirmation that it wants to move higher after closing above this high. So that meant that I should buy from this point, this high, and then wait until it wanted to close below this low, and this a close up below this low could have taken me to somewhere close break even. Could have closed this position right here, and that could have been the day. Yeah, that was Asian session. So that was this move. It was a shallow distribution, if I could say so. So yeah, and after that, because we had two shallow distributions, that makes one full distribution. So we should expect London to accumulate, but not New York, but New York and London instead accumulated. So I should expect the next day to distribute, and it should be an early distribution, right? So an early distribution starts from midnight on this day, right here. So what I was observing is that since we never had another block on the higher time frame, which is the daily time frame, before midnight, we never had another block on the higher time frame. So this tells us that we should move to the lower time frame, where we should look for a setup, another block there to push price the direction of the day. So what am I looking at right here? So I'm looking for at midnight exactly to get a close below this low, below that low, but it accumulated a little bit, forming some other bullish candles. Now we move to the latest formed candle. We assume the previous candle. We assume the candle that formed before midnight. Now we move to the latest candle that formed, and that was this one before price closed below it. That formed the lower time frame data block. It was supposed to be a bearish retro block. Instead, price closed above it, forming, making it an inversion retro block, and that's when I should have jumped in from this point. From that point, yeah, I could have jumped in there, then closed the trade after showing some interest to move lower. That is after close below this low right there, and that's here. No, not really, but until it closed below this low, and that's here right there. So that could have been a painful trade because it closed somewhere close to break even. Because let me look for something. Exactly. I think based on time, that's could have closed it. Yeah, but because we had a double session accumulation previously, so we were expecting to get a double session distribution on this day. So unfortunately, I couldn't have closed that. This is somewhat where close to where I started from. So, and according to the high time frame, this was the red block on the high time frame. Then this fair value gap that formed between price and the retail block, that's what should have been used to push price higher. So after seeing price maybe hitting, let's say in this case we are about 70% of the dealing range. This is the dealing range. Close to maybe close to 80% of the dealing range. That's a goal. So I could have taken off gotten out from the trade. Right. Yeah. So sit down and be safe. Right. Bye bye.